Supermicro Computer, or SMCI, is fundamentally an AI infrastructure company. At its core, SMCI designs and manufactures high-performance servers and computing systems that are used in data centers and by enterprises running advanced workloads such as artificial intelligence, machine learning, cloud computing, and high-performance computing. In simple terms, SMCI builds the physical machines, often referred to as AI servers or supercomputers, that power modern AI models. The way SMCI operates is relatively straightforward but extremely powerful. The company sources advanced chips and components from industry leaders like NVIDIA, Intel, and AMD. These include GPUs, CPUs, memory, networking components, and storage solutions. SMCI then integrates these components into highly optimized server systems that are designed for maximum performance, energy efficiency, and scalability. These systems are sold to customers who need massive computing power to train and run AI models, process big data, or operate cloud-based services. Historically, SMCI has been viewed primarily as a hardware company. They specialize in taking best-in-class components and assembling them into efficient, customizable server solutions. This hardware-focused business model has served them well, especially as demand for AI and data center infrastructure has exploded over the last few years. However, what makes SMCI particularly interesting today is that the company is no longer limiting itself to pure hardware. Instead, it is actively expanding into collaborative solutions that combine hardware with software through strategic partnerships. One recent and important example of this shift is SMCI's move into intelligent in-store retail solutions. Supermicro announced that it is collaborating with a broad range of industry partners to bring AI-powered solutions into physical retail environments. This is a major strategic development because it shows that SMCI is not just selling servers anymore. It is enabling real-world AI applications that directly improve business operations. According to the announcement, these AI-powered intelligent in-store retail solutions are designed to meet increasing customer expectations while offering scalability, improved productivity, and increased profitability for retailers. In other words, SMCI's technology is being used to help brick-and-mortar stores compete more effectively in a world increasingly dominated by e-commerce and data-driven decision-making. AI is reshaping the retail experience in profound ways. By enabling real-time analysis of video feeds and other in-store data, retailers can gain actionable insights that were previously impossible or extremely expensive to obtain. These insights can be used to optimize staff efficiency, reduce theft and shrinkage, improve inventory management, increase profits, and avoid costly stockouts. For retailers, this translates directly into higher margins and better customer experiences. Supermicro is working with ecosystem partners such as Everseen, Kinetic Vision, AllSee, LifeX, Mobile AI, and AAEon to bring these intelligent store solutions to market. Each partner contributes software, analytics, or specialized AI capabilities, while SMCI provides the high-performance computing infrastructure that makes real-time AI processing possible. Together, they are creating intelligent retail environments that positively impact day-to-day operations as well as longer-term supply chain management. This development is important because it potentially represents a second major business model for SMCI. Instead of relying solely on selling servers to data centers and hyperscalers, SMCI can now participate in vertical-specific AI solutions, such as retail, healthcare, manufacturing, and logistics. Over the long term, this diversification could significantly increase revenue stability, margins, and overall valuation. For shareholders, this is a very positive signal. Next, let's take a look at SMCI's financials to understand whether the fundamentals support this bullish narrative. Using Guru Focus as a quick overview tool, we can see that SMCI has a total score of 84 out of 100, which is quite high. This indicates strong overall financial health, profitability, and business performance. One of the most striking things about SMCI is its market capitalization. The company has a market cap of roughly $19.5 billion, which is surprisingly low for a company that plays such a critical role in the AI infrastructure ecosystem. Many AI-related companies with similar or even smaller market caps are not profitable at all. They are burning cash, issuing new shares, and relying on future growth to justify their valuations. SMCI is different. This company is already profitable, and that is a key distinction. It generates real earnings, has positive net income, and operates with financial discipline. This alone makes SMCI stand out as potentially undervalued compared to many other AI-focused companies in the market. Looking further into the financial strength metrics, SMCI has a financial strength score of 7 out of 10 and a profitability rank of 8 out of 10. This means the company is not only making money, but doing so consistently. When we look at the financial charts, we can clearly see that revenue and net income growth accelerated dramatically after 2022. While net income margins are not the highest in the industry, they are solid and, most importantly, positive. Another major strength is SMCI's balance sheet. The company's cash levels exceed its debt, which indicates a strong and stable financial position. This is especially noteworthy because many companies in the same market cap range carry significant debt loads. SMCI's conservative balance sheet gives it flexibility to invest in growth, withstand economic downturns, and avoid excessive shareholder dilution. Now let's talk valuation. One of the first metrics investors often look at to determine whether a stock is cheap or expensive is the price-to-earnings ratio, or PE ratio. The PE ratio is calculated by dividing the stock price by earnings per share. It essentially tells you how much investors are willing to pay for each dollar of earnings. For example, if a stock trades at $50 and earns $5 per share annually, the PE ratio is 10. A lower PE ratio generally suggests a cheaper stock, while a higher PE ratio suggests a more expensive one. However, context matters. High-growth companies often trade at higher PE ratios because investors expect future earnings to grow rapidly. As of mid-January 2026, SMCI's PE ratio is approximately 25.7. For a high-growth AI infrastructure company, this is fairly reasonable. It is not extremely cheap, but it is also far from expensive. Compared to many AI-related stocks trading at PE ratios of 50, 80, or even higher, SMCI looks fairly valued based on PE alone. However, PE ratios only tell part of the story. To get a more accurate picture of intrinsic value, we can use Warren Buffett's concept of owner earnings. Owner earnings were introduced by Buffett in Berkshire Hathaway's 1986 annual report and represent the true cash earnings available to shareholders. Owner earnings are calculated as net income plus depreciation and amortization, plus other non-cash charges minus capital expenditures. This figure represents the cash that the business generates for its owners after maintaining and growing operations. By projecting these earnings into the future and discounting them back to present value, we can estimate the intrinsic value of the company. Using a conservative valuation model based on owner earnings and assuming a 70% earnings growth rate over the next 5 years followed by a more normalized growth rate, we can estimate SMCI's true value per share. Even with conservative assumptions, this model suggests that SMCI is undervalued by approximately 43%, with a fair value around $58 per share. This margin of safety is extremely important for long-term investors. Buying a high-quality company at a significant discount to intrinsic value reduces downside risk and increases the probability of strong long-term returns. To cross-check this valuation, we can look at third-party models such as AlphaSpread, which uses discounted cash flow analysis. AlphaSpread's base case scenario estimates SMCI's intrinsic value at around $77 per share. When we compare this intrinsic value to the current stock price, the gap is significant. This discrepancy suggests that the market may not be fully pricing in SMCI's growth potential and strategic positioning. Now, valuation alone is not enough. We also need to consider whether SMCI has a sustainable competitive advantage, often referred to as an economic moat. An economic moat is what protects a company from competitors and allows it to earn above-average returns over time. According to available data, SMCI has a narrow moat with an overall moat score of 6 out of 10. This means the company does have some competitive advantages, but they are not yet extremely strong. SMCI's strengths include deep expertise in server design, rapid time to market, customization capabilities for enterprise clients, and strong positioning in the AI server market. Dell, HP, and however, there are also risks. SMCI faces intense competition from large players like Lenovo. Server hardware can become commoditized, and SMCI relies heavily on component suppliers such as NVIDIA and Intel. Additionally, the company is exposed to cyclical swings in the semiconductor industry. Despite these risks, SMCI's agility and focus on AI-specific workloads give it an edge in a fast-growing market. As AI infrastructure demand continues to grow, SMCI is well-positioned to capture a meaningful share of that growth. Finally, looking at the stock chart, we can see a strong bullish move recently, including a large green candle last week. This suggests renewed investor interest and momentum. Personally, I am very bullish on SMCI. I currently hold a full position with an average cost basis around $39, which I believe is an attractive entry point. I plan to hold this stock for several years, as I believe the long-term fundamentals, valuation, and growth prospects strongly support higher prices over time. In summary, Supermicro Computer represents a rare combination in today's market: a profitable AI infrastructure company with strong growth, a solid balance sheet, expanding business models, and a valuation that still offers a margin of safety. For long-term investors willing to tolerate some volatility, SMCI could